Hello, my name is Maine Kagan. I'm a mortgage master, founder of Mortgage Solutions Academy. When I started mortgage business in 1983, the only way to get mortgage was to go to banks, savings and loans, and credit unions. There were also mortgage brokers, but they were just private money lenders, and they didn't have a good reputation. So I started working on a mortgage bank, Coldwell Financial, and at that time I had to develop a relationship with different savings and loans, which was actually becoming one of the first mortgage brokers. Today, mortgage brokerage is widely populated, and there are so many different lenders who can offer clients mortgages. In my book, The Mortgage Game, which I mentioned last time, I started with sharing with you 5 C's. 5 C's are the ABC of a mortgage business. I'm going to show you how those 5 C's interconnected, but first let me address the tools which we as a mortgage brokers use. I told you last time that as an apprentice to a toolmaker, I learned 16 hammers. I'll show you how those 16 hammers or 16 tools are applicable today. And let's go through the list. I divided them in 2 categories, conforming and not conforming. We'll talk later on about conforming balances, but what creates conforming loans is existence of 2 organizations, Fannie Mae and Freddie Mac. They don't make loans. They package them and sell them on Wall Street as mortgage-backed securities. And mortgage banks, the organizations will actually sell those loans to Fannie and Freddie. There is the FHA, VA, CalChafa, HAFA, and USDA. Each of those categories have their own nuances, their own rules, and we have to learn how to navigate through them. Then there is a non-conforming. Non-conforming lenders start with the national banks, Bank of America, Wells Fargo, Citibank. And then there is a credit unions and regional banks. Regional banks are smaller banks which US Bank is not regional, they becoming nationwide, but there is a smaller banks which have specialty loans. Then there's the mortgage banks who have their same organization which we have here, but they offer different loans. It's called no QM loans, no quality mortgage loans. And then there are reverse mortgages, which is separate kind of mortgage banks who only specialize in reverse mortgages. And there is a HEI lender, which is lenders who offer special loans based on future equity. And there, of course, private money lenders who started all this business many, many years ago. Why it is important for you to know? Because I'm going to share with you one case which are working now and which I used all of those tools to enable me to find a solution. I have a client who was referred to me by a divorce attorney. Client is going through divorce, and he, according to the agreement, has to give his existing wife, future ex-wife soon, money. He wants to keep the home, and he wants to give her a mortgage, or he wants to pull out mortgage to enable her to give $875,000. Before I met him, and I was introduced to him by the divorce attorney saying that, oh, many maybe will be able to get you better interest rate. This was in her mind. Turned out it's something different. He already talked to 2 different lenders before meeting me, and both lenders came up short. They couldn't qualify him for a loan amount which he needed to give to his wife. I devised completely different strategy. I asked different questions. And I found solution, or at that time it seems a solution, based on an adjustable loan fixed for 6 months, which had start rate 3.5%, qualifying rate 375, but there was one caveat. He was expecting to get a letter from Social Security showing that he is going to be receiving Social Security income, which allows to qualify. We're waiting for this letter for a month. During this month, a lot of things happened. Interest rates were climbing literally daily. So by the time we had the letter, interest rate went up, and I have difficulty to qualify him. So what we have here? We have first collateral first C, collateral. Property was appraised originally 1.9 million. Then real estate agent estimated he would sell it for 3.3, and finally lender made an appraisal for $2.4 million. So we had collateral. Loan has to be 1,275,000. It's a little bit over 50% equity or collateral. Second thing, he had good income. So after adding his Social Security, his income was 19,000, which good income for anyone to have. He had some savings, which had to be divided with his wife. And so we have collateral. We had capacity, but capacity is a big question. We have excellent credit. His credit score was 800 and very little debts. So what we didn't lack here, what we didn't have here, we didn't have enough of capacity. In spite of the fact that his income was high, because interest rates went up, he was not qualified. So what did I do? I had to find a lender who will lend him the money. So I used most of the lenders in this list. I consider every possible situation. As a mortgage broker, I have ability to do this. I called 5 different banks, commercial banks. I talked to different mortgage banks. I was considering a reverse mortgage, all a possibility. And when I was calling lenders, banks, I was asking question, what's your qualifying interest rate and what's your highest ratio? The answer was in finding a lender who will offer me highest ratio. I found one. Ratio was 49%. We end up applying for fixed rate at 6.125, and the ratio was just almost 49%. I'm still waiting for an answer. Based on what I have now, I think we'll get it through. I still keep my fingers crossed. But this is a very good example how my knowledge of different tools allows me to have clients, to help clients. And I'll help yours too, I promise.